Speaking of hard versus soft landing, we look now to China's tech industry, and that's thing number two this morning. Alibaba, which is the top trending ticker on Yahoo Finance this morning, the company raising its buyback authorization to $25 billion from $15 billion, excuse me. It's a 2-year buyback authorization plan. It's going to run through March of 2024. Now, why is this important? It's not just important for Alibaba itself, although it is. We're seeing the stock move higher, as you just saw. But it also indicates potentially a further stabilization of the Chinese regulatory regime. We have seen this big crackdown on big tech and more broadly in China amongst Chinese corporations. Last week, there were some signals that that might be slowing. China's top financial policy agency said it wanted to ensure stability in capital markets and complete the crackdown on big tech, quote, as soon as possible. And then the People's Bank of China, a statement that followed, said it would support those policies. So all of this, and then this following, this buyback authorization seems to indicate Alibaba's comfort now with a level of stability. That said, as you can see from this chart, the company has increased its buyback authorizations a couple of times, even while this crackdown was taking place, and it didn't help the shares, Saz.
Well, if there's any savings grace here, Julie, is that Alibaba shares continue to trade above its 2014 IPO price of $68. And really, that's the only thing here. It's been a terrible investment for the past few years. So much of the hype has been really squeezed out of the stock. I remember when Alibaba really burst into that scene after their IPO. Seemingly every week, this company was launching something new, really pumping that stock, getting that stock price moving. And it's really fallen flat on its face, as it should, over the past 2 years, given where the Chinese authorities have stepped in here with tech companies. But I will note this. If you have to be wondering, if you are inclined to trade the space, does this signal potential bottom in Chinese tech stocks? I think that might be the way a lot of folks are trying to read this. And then secondarily, if you're a JD, if you're a NetEase, if you're in that Chinese market, do you now have to step up here and do some form of big buyback yourself?